Welcome to the Ring Crypto and Stocks 101. Thinking about investing? That is a good idea. It is how you can make your money work for you. Many people want their cash to grow over time. Two very popular choices are stocks and cryptocurrency. Stocks are the older, traditional way. They represent owning a tiny piece of an actual company. Think of big names you know. You can often buy their stock. It is a well-known path. Many people trust it. Cryptocurrency is much newer. It is digital and exciting. Bitcoin is the most famous one. You have probably heard of it. Crypto can seem complicated, but it is gaining attention fast. Many see huge potential here. So, what is the deal here? Which one is better for you? We will look at both closely. The goal is to give you info. Let's get started on this showdown. Decoding digital gold. What is cryptocurrency? Think of it like digital money. It only exists on computers. You cannot hold a Bitcoin like you hold a dollar bill. It uses something called cryptography for security. This keeps it safe and hard to fake. Most cryptocurrencies are decentralized. It means no single bank or government controls them. Instead, they run on a technology called a blockchain. A blockchain is like a public ledger. It records all the transactions. Many computers share this ledger. Bitcoin was the very first one. It started this whole crypto wave. It is still the biggest and most known. Then there is Ethereum or ETH. It can do more, like run apps called smart contracts on its blockchain. There are thousands of other cryptos too. Why do people get into crypto? Some see a chance for really big profits. Prices can go up very fast. Others love the new technology. They believe it is the future. It is definitely a hot topic. Owning a slice of the pie, the world of stocks. Now, let's talk about stocks. When you buy a stock, you are buying a small piece of a company, a tiny share. So, if you own Apple stock, you own a little bit of Apple. It is like being a part owner. This applies to public companies. These are companies that sell shares. Companies sell shares to raise money. They use this money to grow, maybe to build new factories or invent new products. Investors buy these shares hoping the company does well. If the company grows and makes profit, the stock price might go up. Then the investor can make money. Some stocks also pay dividends. Dividends are like a small thank you. If a company makes good profits, it might share some with stockholders. This is a dividend payment. It is usually paid in cash. Not all stocks pay dividends, but for those that do, it is extra income for investors. Stocks have a very long history. Generally, stocks are seen as less wildly unpredictable than crypto. Section 4. Buckle up, volatility and the regulatory maze. Let's talk about something crucial, volatility. This word means how much and how quickly prices change. If something is very volatile, its price can shoot up one day and then crash down the next. Understanding volatility is key before you invest any money. Cryptocurrencies are famous for volatility. Their prices can be like a wild roller coaster ride. You might see huge gains fast, but you can also see huge losses. This makes crypto very risky. Some people love this thrill, they hope to get rich quick, but it is not for everyone. Stocks also have volatility. Their prices go up and down too. No investment is totally safe, but generally stocks are less erratic compared to most cryptos, especially if you invest in large, well-established companies, or in a mix of stocks like an index fund. Market crashes can happen, yes, but daily swings are often smaller. The stock market is heavily regulated. There are government bodies, like the SEC. These rules are meant to protect investors and ensure fair trading practices. Cryptocurrency is much newer, so the rules are still catching up. Section 5. Show me the money historical returns and future guesses. When we talk about investing, people want to know about returns. How much money could I make? Historical returns tell us what happened in the past. It is important to remember this. Past performance is not a crystal ball. It does not guarantee future results. But it can give us some clues. It helps us understand potential. Let's look at stocks historically. Over the very long term, the US stock market has done well. For example, the S&P 500 index. It tracks 500 large US companies. It has averaged around 10% return per year over many decades. Some years are much better. Some years are down. It varies. But that is a general idea. Now what about crypto returns? This is where things get wild. Some cryptocurrencies have produced absolutely mind-blowing returns. Think about early Bitcoin investors. They could have turned small amounts into fortunes if they held on, but for every huge success story, there are also many cryptos that have failed or crashed hard. The future for both is uncertain. Nobody knows for sure what will happen. Stocks have a long track record. Crypto is newer, more speculative. Section 6. Your turn to invest. Getting started and final thoughts. So how do you actually invest? Let's talk about getting started. Investing in stocks is quite easy now. You usually open an account with a brokerage firm. Many are online. They have apps. You can often start with small amounts. You can buy shares of companies. Or you can buy index funds. These hold many stocks at once. Getting into crypto is also accessible. You typically use a crypto exchange. There are many big exchanges. You create an account, add funds, then you can buy various coins. But you need to be careful. Security is super important. You need to protect your crypto. Using secure wallets is a must. Let's quickly recap the key points. Stocks mean owning company pieces. Cryptocurrencies are digital assets. The risk levels are very different. Your comfort with risk matters a lot. Good luck.